Does an LLC save me taxes? Short answer, no. Long answer, no, but everyone thinks that it does. And it ends up costing you and your business thousands of dollars. But don't worry, today we're actually gonna be proving it with math, debunking all those myths, and showing you how an LLC can save you taxes. Let's get into it. What's up, guys? Mike back at it again, CPA, co-founder of Ledgerly, alongside my partner in crime, Andrew D'Amico, where we have helped hundreds of business owners navigate and pave the way on understanding a topic like this today. For all of you individuals out there maybe thinking about getting into an LLC, that's why we're here today. We're gonna clear this air. So make sure you hit subscribe. Welcome to the family, and let's clear it up once and for all. All right, let's cut right to the math. Let's say your business is bringing in $80,000 in net income. Scenario one, you're a sole proprietorship. There is no LLC. You're gonna pay self-employment tax of 15.3%, and you're gonna pay federal and state income tax on whatever bracket you fall in. So rough numbers, self-employment tax, that comes out to about $12,000. And now let's say you're in the 22% tax bracket, call it $16,000 of income tax. Add those up together, we're looking at a total tax liability of $28,000. Now, scenario two, you form that LLC. Oh wow, it's gonna save me taxes, right? Let's say you make the same $80,000 in net profit. You're gonna pay 15.3% in self-employment tax, which is around that 12,000 number we previously discussed. And you're gonna pay about 22% in income tax, which is that 16,000 that we previously discussed. Total difference, zero. The only thing that changed is unlocking that LLC. Yeah, maybe you have an EIN number with the IRS, but the EIN number does not automatically lock you into an LLC. The LLC is at your state level. So if that's the case, then why is everyone so confused over this? Here's the real issue. People are confusing the LLC with different tax elections. For example, an LLC, that's a legal structure that serves for asset protection purposes. Now, maybe you've seen TikToks, maybe you've seen Instagrams of set up a C Corp, set up a partnership, set up an S Corporation. Those are the tax elections. So for example, someone says, hey, I just set up an LLC. I actually ended up saving like $8,000 this year. Well, what actually happened was they set up an LLC and then maybe they converted to an S Corporation. And that S Corporation tax election opened up the door for tax savings on the payroll side. That self-employment tax, that 15.3%. So the tax election saved them money, not the LLC. All right, let's dive into 5 of the biggest myths that we're gonna debunk and put all that false information that you're seeing on TikTok to bed. All right, myth number 1, LLCs unlock special deductions. That's false. You can deduct anything that's ordinary and necessary in the pursuit of revenue, whether that's home office, auto, software subscription, meals and entertainment with clients, office expenses, the list goes on. Whether you're a sole proprietor, single member LLC, an S Corporation, C Corporation, partnership, I don't freaking care. The entity structure does not dictate what you can deduct. Your expenses do, and the industry that you're in does. Number 2, oh, you pay less taxes with an LLC. Nope, that's false as well. Now, when you register for an LLC, the default classification is a single member LLC, the exact same way that you would be taxed as a sole proprietorship. Which, as we talked about at the beginning, 2 different scenarios, same outcome, leading to 0 difference. Myth number 3, oh, the rich people use LLCs to avoid taxes. Now, that's half true, but this is why that's misleading. Wealthy people use LLCs for asset protection, ownership holdings, real estate structuring, the list goes on. Now, the tax savings actually come from those tax classifications that we talked about, whether that's an S Corporation election, C Corp election, different depreciation rules, cost segregations, charitable remainder trusts, the list goes on. So no, rich people, wealthy people do not solely use LLCs to avoid taxes. All right, myth number 4. Oh, my friend saved $10,000 forming an LLC. Like the wealthy, your friend did not save $10,000 by simply setting up an LLC. Last but not least, myth number 5. You need an LLC to be a real business. No, that's absolutely false as well. The IRS doesn't care if you have an EIN with them or an LLC at the state level. Once you make that first dollar of self-employment income, you are a business in the eyes of the IRS, which is kind of cool because then you can start taking all those deductions that we talked about that are ordinary and necessary for the pursuit of revenue for your business. If you want to save money on taxes, regardless of the LLC or having the LLC, make sure we're focusing on this. Number one, tracking every legitimate business expense. Number two, maybe making quarterly estimated payments. Number three, let's look into some retirement accounts, a solo 401k, maybe a SEP. And number four, I recommend you consulting with your tax strategist, your tax advisor before you do this, but look into electing S corporation election. Number five, meet with your CPA. Your CPA is your quarterback, but not just once a year, not just at the end of the year. Meet with them throughout the year. And guess what? Those 5 strategies, those work regardless without the entity classification. So bottom line, the LLC does not save you taxes. If you want tax savings, you need tax strategy, not just the paperwork. And if you're looking for a change of flavor in your life, get in touch with us. Let's run your numbers and come up with a tax plan to put you in the best seat overall moving forward. But at the very least, make sure you like this video, drop a comment, drop a question, subscribe to the page, and we hope to see you on the next video. Take care, y'all.